oil prices swung as WTI crude hovered around $70 per barrel after President Trump reaffirmed his commitment to lowering prices. Speaking at the National Prayer Breakfast, he announced that Interior Secretary Doug Burgum and Energy Secretary Chris Wright would spearhead efforts to ramp up U.S. oil production, vowing an unprecedented surge to push prices down. Meanwhile, Saudi Aramco sharply raised March crude prices, citing increased demand from China and India alongside disruptions to Russian supply due to U.S. sanctions. On the trade front, U.S.-China tensions escalated as Beijing imposed tariffs on American oil, LNG, and coal in response to Trump's latest trade measures. However, with China importing relatively small volumes of U.S. energy products, the overall impact of these tariffs is expected to be limited. If WTI oil falls below the $70 level, it is likely to move toward the support level at $67. Otherwise, prices could rebound toward the $73 resistance level. Natural gas futures edged higher on Thursday following the release of the latest EIA storage report, which showed a 174 BCF draw for the week ending January 31. This slightly surpassed some pre-report estimates but remained in line with the 5-year average withdrawal. With the market consolidating for 4 straight sessions, traders are weighing the potential for further downside against an anticipated rise in demand next week. Meanwhile, storage deficit projections are leaning bullish, as forecasts indicate the gap versus the 5-year average will expand from the current -111 to -135 billion cubic feet over the next 3 weeks. Nevertheless, while this points to a tightening supply outlook, inventories remain within the historical range, keeping bullish pressure in check. Current weather patterns reveal a stark contrast across the U.S., with frigid temperatures and snowfall gripping the northern third, while the southern two-thirds remain mild. Analysts project light national demand through the weekend but expect a sharp surge to high demand levels next week as colder air pushes southward. This shift could lend some support to prices, especially if colder trends extend beyond mid-February. However, the market remains cautious, as recent mild conditions have kept withdrawals aligned with seasonal norms rather than sparking a sustained price breakout. In the short term, nat gas prices remain under pressure due to weak demand and technical resistance. On the downside, support is forming near the 100-day moving average, with last week's low at $3. A break below these levels could pave the way for further declines, particularly if the market views storage levels as sufficient despite recent withdrawals. However, next week's projected increase in heating demand could pose upside risks, especially if storage withdrawals pick up. A move above $3.43 may spark fresh buying, particularly if updated forecasts extend the colder trend into late February. Please like, subscribe, and comment to support the channel. See you in the next one.